The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Okay, we're going to start out here with the DAX index. As you can see, we rallied up to a 78% retracement. What I did on this DAX index chart, folks, is I blew it up a little bit because if you put too much data in it, it just squeezes it together and it's harder to see. So I just tried to show the last 30 days so you can see what's happening. But we did hit a 78% retracement, and as you can see, we came down. We made a little bit higher bottoms, all morning long, giving it a slightly bullish bias, which is what we're seeing in the U.S. stocks, of course. So we've had the first request we've had is about Twitter. But before I get to Twitter, I wanted to bring you up to date here on this S&P because we're approaching this 2144 level. This is going to be a very, very interesting spot. The reason why is that we are trading it be an ABCD pattern. In fact, there'll be two of them there. There'll be a total of four ratios coming in at that time: a 78% retracement, a 1.27 retracement, and a 1.618 retracement. So 2144, 2145, should be good. Should be pretty good resistance. However, if we get above the 2149 level, then all bets are off because this would certainly be a failure type pattern. But as you can see, we had some nice retracements yesterday, all at the 78% level, just spot on to the exact number down there at that 2125 level to start off with. That was a 61% retracement of the low. You can see that on the far left-hand side over there. Then we made higher highs and higher lows. So we are in a short-term uptrend ever since October 26, which was yesterday. So this is going to be either a two-day rally here or we're breaking out to the upside. So the key number to watch is this 2144, 2145. That'll give us a pretty good idea. But again, if we get above 2149, that will tell us that most probably we could be breaking out, to the upside. I happened to turn on Bloomberg. That's the first thing I do in the morning, and just to see, and also CNBC, just to see that the end of the world has not happened. And I realized that there's been a lot of earnings reports, and all of them, with the exception of one or two, have been very, very positive. And that's why we're getting this opening bias. And remember that amateur hour, of course, is the opening part of the day, which you want to take with a grain of salt. Try to keep your trades until about 10 or 10:30. You'll be far better off because that's usually after it's going to see what's going to happen. Okay, let's take a look at Twitter. We've had several people ask questions about this. Let's get the chart up first, and then we'll be able to take a look at it. As you can see, during June through October, we made a perfect 61% retracement on the longer term charts. You don't see that on this one because this is a daily. The weekly, that level at $25 a share was a 61% retracement of the 2015 high. And also you can see the ABCD pattern that was there measuring to 25 also. From there, the market quickly broke 30% all the way down to the $16 and 30 cents per share level, which was a nearly spot on exact within 10 cents. What am I talking about? Within 2 cents of the exact, 78% retracement. And now we're trading at 1803 this morning. So it's had a little bit of a bounce from that level. The problem with the Twitter chart, folks, and you can see this several times through stocks like this, is you see these monster gaps that are in there. Now, most gaps will be filled, but the one with Twitter is very unusual because if you look at it, it actually left an island reversal between the 19th of September and also into the 1st of October. That's usually extremely bearish pattern when you have something like that happening. It's just it's just really amazing, when you see these island reversal patterns, that they give you a spot to say, wow, something really dramatic happened, in this, and then you'll be able to look at it. To give you a perfect example of this, and I'm just giving you a little rough idea of how a technician looks at some of these things, because these are all just patterns. That's all they are. If we take a look at Mr. Logan's favorite stock, where he likes to eat, is Chipotle Mexican Grill. And you'll notice here we had two island reversal patterns in this. The first one back in 2015, the market backed off a little better than 20% from that level. And then we had the monster ABCD pattern, and also a island reversal that happened in October of last year. This is right when they were having their problems with the food. And I swear I don't believe that what happened there is not what really happened. It sounded like sabotage to me, because it just doesn't make any sense that only a few of these stores would have a problem in large cities. It's just well, I guess that's my paranoia coming through, and we'll not worry about that. Anyways, you can see here we gapped down yesterday, and today we're trading about this same level, around 368 and change. That sets up a 1.618 expansion on this, down another 10%, down to that 332 level. So that's what we want to keep in mind. The reason why I'm showing you these island reversal, folks, because you don't see them very often, but when they happen, they do have a really good probability of, giving you an idea of what something has happened in the stock. And that's the real beauty of being a technician, is you don't need to know the fundamentals. You just have to remember one simple fact, and that is that these markets, they operate on some types of fundamentals that we don't understand. But the one thing they cannot do to us is they can't hide from us. They can give us all the misinformation they want, just like we've heard from Enron and all the others that have had these problems, but they can't hide from you. So if they're buying, the prices are going to be going up, and if they're selling, prices are going to be going down. And believe me, someone on the inside knows ahead of time when some of these things occur. I don't know how they tell their friends or whatever they do, but that's just normal. I mean, that's just a normal sequence of events, in my opinion. So keep in mind that these things do happen, and you want to be able to take a look at, why it's important. Now, we got two things to focus on today, and the main one is this Treasury bond market, folks. Let me take a quick look at it for you. You'll see here that over the past couple of months, we had one really good rally between the 20th and 29th. As you can see, the timing for that rally high. And look at the timing for the rally high that we had just 2 days ago at the 382 retracement at this 165.09 level. This is telling us that we could be looking at something really dramatic happening in interest rates very, very soon. Whether it's going to be the Federal Reserve do something, I would be totally shocked if they did, but I get shocked a lot. But you're coming into within 12 days of an election, and it's going to be one of our most important presidential elections since the last one, so we'll see. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're talking about the Treasury bonds. We're breaking down below those key lows that we hit just the last few weeks. We are breaking below those prices. We'll just do this chart again in case you folks haven't seen it. We are now trading below the low of the 16th of October. That's a very, very important place to be watching Treasury bonds. But what we need to do is we also need to take a look at where the bonds are on a little bit longer time frame, and that's what we're going to do as soon as I can find the bond chart. Again, there we go. I'm getting a little better at it, but not much. I want you to take a look here because we are coming down to a really key support here, about one handle lower, down about this 161.10 level. You'll see that's a 61% retracement. It's also a 1.618 expansion of that previous move. So watch that very closely. The other thing is that if we don't break hard from right here, in other words, if we just go down here and just sniff around for these stops of which people look at, for which the low of the 10th, and it doesn't go anywhere, this could be a pretty significant bottom also. So you got a couple places to watch it, from a very, very a technical standpoint. Now, unfortunately, I have to do something here that might be a little bit, I'm going to share, since you can never see me live, I'm going to put in here, we did this morning, my little bride was kind enough to show a picture of what my office looks like. And so you'll see me there. Those are the two 42-inch monitors. And there's the little laptop where I do the radio show on. If you'll notice the two Nautilus shells there up against the computer on the left, those are over 50 million years old. Those are really beautiful sculptured Nautilus shells that we collect. And then the painting on my right is that's the 2-foot by 3-foot painting with all the rules and stuff that I use. And if you'll notice on the floor, this is an oak floor, was built by one of my students here in Tucson many years ago, and he put the butterfly and Gartley pattern inlaid it into the wood. So that's what the office looks like. So even though you're not with me, here's where I spend my day in the morning. I usually stay till about 9:30 or 10, and usually I'm pretty much done. That's true, Marshall. You've been there, done that, and Marshall's been able to take advantage of Sarah's smoothies, which are always really nice. Okay, let's move on to a couple of other things that are going on. We have a situation today on the hourly chart on soybeans. Someone's asked to take a look at these. Now, what we've done now is we've looked at this. The number on the beans was at 1026, and we hit that last night. We got up to 1028 in the January beans. We've now switched from November beans into January soybeans. So that's a key thing to be watching here, to take a look at. Now, the beans went up, but the open interest dropped. That's usually a very negative connotation. Now, they've sold off since they hit this level last night. They sold off about 9 cents. So if if you're doing that kind of thing and you knew these patterns, it'd give you a pretty good idea. So if it broke 9 cents, you certainly wouldn't want it to go up and make new highs, because the 9 cents that you made is in your pocket and you don't want to give any of it back. That's the problem. Remember, when you put a stop in and the market works in your favor, the money that you're making is actually yours, folks. Even though it's paper money and you haven't booked it yet, that's still your money. So if it goes $500 in your favor and you had a $500 risk and you don't change your stop, now you've got a $1,000 risk. If $500 that you've made plus the $500 that you originally risked, and that's not very smart. So you want to reduce your risk as soon as possible, because remember, the only thing we can control in the risk-reward equation is the risk that we're dealing with, and that's the main thing to see with where it's going at. Someone asked to know where the bearskin rug is. We actually sold that to Goodwill. We got a really good price on it. So I've never seen a bearskin rug. I never have. I've seen one made of mink, but I've never seen a bear skin. Okay, let's get on to something else that we've been watching for quite some time. We were going to have Rich Anderson on today, but he was traveling, so we're not able to get him. Well, maybe tomorrow. But we want to take a look at this cattle market. This is a really good example of harmony in the markets. You can see the rally that we had in July. It was perfectly equal to the rally that we had in September, and you can see that we're looking at the same thing here in October. Now, there is a possibility here in cattle that if we go down and make a third drive down there to about $91 a pound in cattle, and we'll be looking at April cattle now, moving from December to April, just because it's easier to trade it, and the open interest will start to increase more. But that would set up probably what I would think would probably be one of the trades of the year, because you'd have a 3 drive to a bottom there. You'd be down near the cost of production in cattle, and you'll see that if it does that, now I don't know whether it can do that or not, but as you notice, the first line of support here will be at that 61% retracement there at $99.50 a pound in the cattle. It doesn't make any difference whether it's a cattle, Microsoft, Goldman Sachs, whatever you're looking at. These patterns all look alike. If you took off the prices on the right, and you would never know what you were looking at. No one, and if anybody tries to tell you differently, they don't know what they're talking about, because if you took off the price and what it was, how would you know what it was? So all the charts look alike, and that's another beauty of why technical analysis works. It works on all things that are liquid and actively traded. And and I think if any stock should have at least 500,000 shares a day, if you're looking at a stock, that's the main thing. There's some futures are a little less liquid than others. Like there are times that natural gas gets a little crazy, and some of them all get crazy at times. But all the major commodities that you're looking at are really pretty good. And if you look at the foreign exchange, those are all good. I mean, some of them are unbelievably good, like euro, yen, pound, Swiss, Canadian, Australian, and Japanese yen. Those you don't have to worry about those, because there's a lot of money goes through those folks, billions and billions and $1 trillion in the euro. And speaking of the euro, we're in a situation in the euro and the U.S. dollar that is getting very, very critical. We're going to look at this U.S. dollar here just to show you where we are again. We're just bouncing up against that same level that we were day at this. We're trading at around a little right in this 98 level. If we could get it above 99.20, then it's going to take off. In order to do that, we have to break 108.50 in the euro. Last night, we just went down and made a 61% retracement of the high we made yesterday at that 109.47 level. And now we've just rallied back 40 pips. It's just bouncing around. You know, the one thing is the thing you want to be looking at. Okay. The next question that someone asked was about the chart of the wheat that we were looking at. I wanted to bring this to your attention because we have reached the first profit objective in this. We booked profits for the 24/7 service, quick $600, which was really nice. The trade only went against the $75, which was really an ideal situation. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I'd like to show you how I look at the market sometimes. You know, I'm a pretty good technician. You know, there's probably a lot of people better than me, but I knew a few things at work. But if you take a look here at this Treasury bond market over the last 6 weeks, I want you to look at the time of September the 21st. That was right on the equinox. You'll notice how we made a slightly lower low there over the last few days between the 11th 13th, 15th, and then also on the 21st. You notice how it made a lower low by just a tick or two? This could be what's happening right now, folks. I don't know if it is or not, but you have to ask yourself the question. There should have been a whole lot of stops down there, and there could be, but so far they haven't hit it. All we've done so far from the 16th of October is we've taken it out by one tick. That low on the 16th of October was at 19, and this one came in at 18. And right now, if you'd have sold it there, you'd have a loss. So what I'm doing here is I'm buying it. I bought it at actually 21 right here, and I'm only risking 4 cents. If it goes down, 5 cents, $150, and that's not bad on a $100,000 contract. So that's all I'm looking for, and I'm just assuming that it could be a potential for reversal. And all I'm looking at is the fact that the market went down there and looked for stops, and there was nothing there, and it's been a good half hour with nothing happening. So the risk on this is going to be $150, and of course you could easily rally 5 or 6 pips in your favor, and then you could reduce your risk anyway. But some of these things are the things that I learned when John Hill was teaching me this stuff, way back in 1970 through, 1976. He literally held my hand almost every day and gave me access to the books that I needed, which I was able to get through our good friend Don Mack at the Investment Center Library there in Los Angeles, right off of Little Santa Monica Boulevard. And then when I went to work for Drexel, Drexel was kind enough to accumulate all of these books, for me, because we were able to make Drexel a lot of money and our clients a lot of money. So it turned out to be pretty good. I had an interesting phone call 2 days ago. I wanted to mention it yesterday, and I forgot it because I was getting ready for the webinar. But I got a call from one of my old clients from Drexel, and he was still has his Cougarans that we bought for him in 1974. Now that is a pretty good thing. So we'll see, what's going on here. We'll take a look at this. And anyway, just to give you a rough idea of what we did in the seminar yesterday that you can or the webinar that you can get, we're going to be taking a look here at one of the stocks that we talked about, and I wanted to give it just to show you what it is, to see if this pattern actually is going to work or not. But it is this 135 pattern that I learned from the long streets. This happens to be UPS, and I wanted to show you what the pattern looks like, and you'll see that we're in a downtrend in UPS, and it's having a little bit of a buy in here, so we'll see what's happening. We need to check to see some of these prices because we're at such critical levels. We came within one tick of the exact price in the S&P at the 2144 level. As we said, that was the ABCD Gartley up there, so that should be a very, very important spot, to keep an eye on without worrying too much about it or not. Now you notice that the bonds have just gone down and made a new low at 17. The previous low was 18. So if we get to 15, that will tell me that this is I made a mistake on this trade, and I would take a loss of $150 and then move on, to the next trade, to see what will happen. As far as the gold is concerned, we are in a really tight trading range in this gold, folks. It's acting like it wants to break out to the upside. I don't think there's any question about that. But, it needs to close above 1278. We really need to get above that level. That's only $8 from where it is right now, but we really need it to get there. And the reason why is platinum is so weak, and the silver is also acting not nearly as good as it should. Now the old cowboy is going to take a loss here just now. So I just got out of my bonds. You can forget what I said about the tape reading. This time it didn't work. Sometimes it worked, sometimes it didn't. But anyway, that's what I did. I'm willing to take that $150 risk. Fortunately, I had some short soybeans that are working really good, and that's working out okay. All right, let's move on to the next question that someone had, and that was about the chart of, hold on one second till I get it up here, and then I will bring it to your attention here, and that is the Facebook. This was the same situation that we had here where you have this island reversal pattern. that we had yesterday in Facebook. It did gap down, and it did, in fact, it went down and touched the lower end of that gap to fill that gap. So this is a island reversal pattern in Facebook. As long as it doesn't get above 133 again, you certainly don't have to risk very much on this. It's only, your risk on this was only $1.30, and when you're talking about a stock that's trading for 132, that's 1%. So that's you can very seldom do you ever get a chance to trade just a little bit, with a small amount of risk. There's just highly unusual that that's able to do that. So we will do one thing at a time as we go through these and look at some of the ones that we're trying to look at. Now, I've had some questions about the Chinese market. I know John Logan covers it in his. I'm going to take a look here and show you the ETF that we have. You'll notice here, again, this is the ETF for the Chinese shares. This thing has been in a downtrend, folks, since 2012, I believe. So we've had a tremendous bear market. It bottomed in February, and we've rallied for 9 months. If you'll notice, there again is that little 135 pattern in the Chinese shares where each of the highs is equal but lower. And so that's the key. And as you notice, we just had a retracement, and then it turned down again. So this is another sign that things are not nearly as bullish as they're trying to tell us they are in China. So that's a key thing to watch here. Now, if we ever get above this 39 level, which is only $1.50 away, then you'll be able to look at it. The one thing you have to consider now here, folks, when you're trading this FXI, I believe that the Chinese renminbi, the price of that renminbi will be reflected in this ETF. You'd have to check that. But I know this is the fact when you're trading the DAX and when we trade the German market or the London market, you do have to factor in what the pound and the euro are doing. So you most probably have to be watching the yuan, because if the yuan gets really crazy, this will most probably affect this FXI, because they have a lot of things built into these things that's way beyond my pay grade. So you'll have to check those out for yourself. I don't particularly like ETFs. I believe what Warren Buffett said, they're the weapons of mass destruction, but especially the options on these things. But anyway, that's neither here nor there. That's what the chart looks like. That's the main thing that we're watching as we go through here. Now, we have one other question, and that is about the Deutsche Bank. I wanted to bring this up again. We did get up to the 78% retracement level again in the Deutsche Bank, and then we turned back down again. So this downtrend is still intact. We need it to get above 1475 for it to be a positive breakout. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I wanted to share with you a pattern that it's on the watch list that I'm watching very, very closely. It's one of your favorite stocks, which happens to be Goldman Sachs. I noticed that Lloyd Blankfein was on Charlie Rose last night being interviewed. I think it was Charlie Rose, but it was a half-hour interview of how he got started. He basically was a street kid, from what he says. He had very little education, and he was lucky to get into Harvard. He got in on a hope and a prayer back in 1971 and turned his career, into something, really spectacular. But take a look at this Goldman Sachs, because you have three ratios present here, folks. You've got the 50% retracement going back to the high of last year. You also have a 1.27. It's actually 1.37, which is close enough for government work. And then also you have a 61% retracement of the high that we made back in November. That number is 176.44. I believe we're trading at 176.80 right now. We did hit a high of 177.20, I believe. So what I'm doing is I'm watching this, because we did have an outside day yesterday. In other words, we had a lower low and then a higher high. And if it reverses and we get below this 176 level today, then that would be the spot that I would be saying, well, this would where I would like to take a nibble on the short side of Goldman Sachs, because at that point you can only risk 3 points in a stock that's trading for 176. So that's how I try to handle it. Now, let's take a look at something that I did wrong. And let me just show you that I do make mistakes, especially when I'm on the air and not thinking properly. But let's just take a quick look here. You'll see here, there's 1 second. This is the first one of what I wanted to do, but I updated this so you can see the mistake that I made, and I think this is it right here. Okay, here's what I did wrong. I risked only 5 points in the Treasury bond trade, and I put my stop at 162.15. Folks, go back and look into September. You'll notice that it came down 106%. In other words, 6% lower than the previous low. That's exactly what it did this time at 162.15. I should have seen that ahead of time, but I didn't. So that's neither here nor there. So I re-entered, and I'm risking another 5 pips to see if it's going to be a good trade or not. Believe me, you lose a lot, but you're also going to win a few. That's the main thing, to keep in mind, when you're doing these things as you go through. The soybeans have started. Soybeans have actually moved 15 cents off that high that we posted early this morning. That's the equivalent of $700, which isn't bad. So whether you did that trade or not, I know some people did, because they emailed me the trade and said, is this correct? And I said, well, it's about as close as you're going to get for government work. So that's mainly it. Okay, the next question that we had was about the New York Stock Exchange Index. And if you'll give me a second here, I'm going to bring it up and show you. Oh, please tell me I'm going to be able to bring it up and show you. I know, there it is. See, I knew I got it ready. Okay, here's where we are. And we've done exactly the same thing that we're doing in all the other markets. So give me 1 second here, and we'll put this into the room. And you'll see that we are still in a very strong downtrend. Now, remember, we have a P index date today. The Pesavento index is an index that Dr. Ruth Miller showed me and Dim Twentyman back in 1986 and 87 when we were writing the book, The Astro Cycles, The Trader's Viewpoint. And basically what it is you could visualize in your mind a bell-shaped curve, and at each of the tails of the bell-shaped curve, you'll in the 2% area at 98% of the move. In other words, 2% is the chances of it happening. If you have 14 or more aspects, or 3 or less, you're in the 98th percentile of anything happen. That makes it an outlier event. And we did a lot of testing on those, and they have a better than 70% probability of a major, at least a 3 to 5 day move in your favor. Frank Tauscher, who wrote the Stock Super Traders Almanac, who was a dear friend of mine, he thought that it was the best single timing cycle thing that he ever found. He even mentioned it in his book each year, and he described it a little bit. But what you're looking for is you're looking for things that don't happen very often, like only 2% of the time. And so that's the key to whether it works or not. This is a P-index date, so whether it's going to be anything or not, I'm not sure. Our good friend Norm Winsky sent me some things that we do have some things that are heliocentric that look very interesting for today, but and today and tomorrow. So watch this closely, because I do follow the P-index. And remember, we are looking for a low coming in here with the Bradley model too, as we've talked about this several times, and we'll post this up again so that everybody can see how the Bradley model is still hanging in there, but we're over the low right now. So whether it's going to be a lower low or not, we'll have to wait and see, but it should be interesting here from this point. And from that level, we should get about a 6 or 7 day rally right into the election cycle. That's the election cycle is the Bradley date also. November the 8th. It's not a cycle, that's just the date of voting. We voted early yesterday here in Arizona, and it was very pleasant. There was not any really long lines. The people at the polling place said that there was a lot more traffic than there was 4 years ago, but it was very, very simple to do the voting. It wasn't. I was only able to vote 19 times yesterday. They put a limit on here in Arizona because of Obamacare, so you can only vote 19 times. No, actually, they watch it pretty closely. You have to do a physical ID. They look at your picture with your driver's license. They take your driver's license down, and something very unusual is they check your signature from the last time you voted. I didn't realize that they did that. So that's that's pretty much a thing. Someone's asked if there were any armed observers. Duffy, this is Arizona. Everybody's armed. Don't everybody in Arizona carries a gun. I mean, that's even the ones that don't like guns carry guns. That's, I don't know if you've ever heard this story or not, but the state policeman stopped this little old lady here in Tucson, and she had a .38 caliber gun on the seat, and he says, "Wow," he said, "that's a pretty nice big gun for a little old lady." So, "Well, I've got another one." She reached in her glove compartment and she pulled out a .45 911 automatic, and he said, "Wow." He said, "Do you have anything else?" She said, "Well, I keep this sawed-off hog leg underneath my seat." And she said, "Lady, what the heck are you afraid of?" He said, "Sonny, I'm not afraid of anything." So just remember, the response time for the police is 22 minutes. The response time for Smith & Wesson is 0.67 seconds. So just remember that, I don't know, I'm an old, I'm just a farm boy from Indiana. We had guns since the time I was 3 years old. I used to help my grandfather, clean his shotguns from when he went out bird hunting. So, we've never had any trouble in the family with stuff like that. Both of my daughters are expert marksmen. They can shoot with the best of them. And but anyway, guns don't kill people. People kill people. Just remember that. And that's the main thing. We cannot let our Second Amendment go, or our First, or any of the others. And that's one of the problems that we have to worry about here is some of these amendments. But I don't know if you know this or not, but one of the reasons why the Japanese never attacked us was the fact that they knew that there were 600,000 gun owners in Illinois, Michigan, and Wisconsin, and Minnesota. So anyway, that's it. All right, we'll be right back. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, one of the fun things of working here at TFNN, you get to meet so many nice people. And last night after the webinar, I had probably 4 or 5 emails, people asking me, is this the pattern that we were talking about? And I posted it in here. I don't even know what this stock is, DLR, but it was a stock that just fit all the parameters. What's interesting is you have to see what happened to this stock. It opened 50 cents higher, which the stop on this would have been $1. And as you can see here, it's dropped $3 in the first few minutes today. So that makes it a really nice, return. And who knows where it's going to go to, because the profit objective on this, could be really good. So anyway, we'll keep an eye on this. But remember, we do have a important Bradley date to date, and then we have another one coming in on November the 8th. So we want to watch that very, very closely. One of the questions that someone's asked is about the real estate market in Hong Kong. I think Jimmy John from Jimmy John is a restaurant here in town. But the Joey John from Hong Kong, who's a guest of John Logan, he basically said that it's weakened a little bit, but still holding up, relatively well. So that's a main thing to keep in mind. That's a main thing. Okay, let's go on to we're going to finish up here in just a second. And, it's still, moving up here a little bit in the market. We sold off a little bit from the high. We're actually down 10 handles from that level we were looking at the 2144 level. So if we close badly today, that would tell us that we're going to make a low sometime today, and that's what we'll be looking at that, very, very closely. So watch that as we're going through this level here. Okay, I think that's almost it. I don't see I don't hear the noise, but I think the time is up. We'll wait and see. The gold is still got some support here. If we get down to 1272 in the gold, 1262 in the gold, that should be pretty good support. That should be a really good support in the gold at 1262. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.